Welcome back. Sorry for starting 4 minutes late. Thank you, Hook Nation. Market was up quite strongly today after a pretty brutal Friday. The S&P up about a percent and a half to 3,050 ish, and then the Nasdaq up a percent, 1.2% to 9874. The Dow moved stronger than the S&P, but you guys all know that no one I don't really pay attention to the Dow for good reason. And let's see, there's an echo.
I turned mine off.
Okay. Yeah, okay. Is the echo fixed? Yeah, okay, cool. Yeah, and so, it was a good day. I think there was some good economic indicators. The Dallas Fed manufacturing activity up 40 or 43 points above expectations. The big thing that was a surprise was pending home sales, which was up 44% in May, above expectations quite a bit. And so, look, does pending home sales mean much to me? I think it just kind of one of those nail in the coffin, or I guess the cherry on top that makes me believe that this market, this recession that we are going through, is one that will continue to polarize further increase the wealth gap and the wealth disparity, with assets getting inflated, stimulus checks going out, essential workers being, essential, but a lot of them are lower income, and a lot of kind of more skilled, high earning folks being able to work from home, and a lot of kind of that lower middle market getting their jobs cut. So it's interesting, and I've said this the last couple episodes. Household savings and household balance sheets have actually increased through this whole crisis because families aren't spending money other than on groceries and kind of tech stuff. But they've been either getting stimulus checks in addition to their jobs. I know many people in my day-to-day, or I know some people that have gotten stimulus checks even though they've kept their kind of jobs in some form of another. And and so it's kind of a weird artificial thing, and who foots the bill? It's taxpayers. And you would think, where's the inflation? But if all that money goes back into assets, you see asset price inflations, and we have yet to see CPI inflation. So that's kind of the one big thing, the one big tail end risk is if we see runaway inflation, this whole experiment can go kablooey, whatever that is. But I don't fully expect it. It could be a tail risk. I don't know. I'm not a deep macroeconomist, so that's just one thing to keep your eye out on. So manufacturing up, pending home sales up. Friday was down because of the massive spike in COVID cases. And I think I think over the weekend, it seems like the market has digested that news and saw that deaths aren't really spiking as much, and that it's mostly young people catching it. And the fact that it sounds like it's very bar oriented in Texas specifically. And so Texas has now shut off all their bars, and a lot of states are saying we're going to shut down bars. So if it's really like a bar kind of thing, then maybe we can get a handle of that. I think the question is, will deaths spike as well? We know deaths are a lagging indicator. So I guess we'll see in a week or two. I don't think deaths are going to be as a percentage as bad as we saw before, because it is something that takes a disproportionate toll on the elderly and those with comorbidities and pre-existing conditions, and who are already unhealthy with either hypertension or who's smokers, that kind of stuff. So I'm not confident in any of this, right? I am not a PhD macroeconomist. I am even worse. I'm not even, I've never really studied communicable diseases or, pandemics or epidemics. So, my guess is as good as yours. I probably read some more data than the average person. My predictive abilities on COVID aren't going to be materially better than maybe some of the doctors you see, prominent doctors that you see out there. So just when you ask me context of that, I do believe that 20 to 25 times price to earnings on the stock market can persist, meaning in the meaningful future. So if that's the case, all eyes are on EPS or earnings, right? So if all eyes are on earnings, what would affect earnings? It's either a recovery through all this and a look forward because we're on the recovery, or we get re-shut down. And again, I think it's as a community, do we believe in that? Do we believe that we can shut down bars, keep restaurants at half capacity, and, you know, crawl out of this thing until we get a good therapeutic, a good steroid, a good vaccine? And when does that come? So that's the key question. I don't think anybody on this planet can tell you, right? No, nobody can. This is all, this is not gambling here. Like, I don't really teach gambling. There's poker for that, and there's, you know, pump and dump stocks for that. I just, you know, investing is a bunch of educated projections, and at the end of the day, if it's a buy or sell decision, and it's based on probability weights, it's based on research, and sometimes it's based on a gut feel. But no gut feel without real research, because that's just gut feel. And if that's replicable, then lucky you. You have a crazy gut. But you know, for the rest of us, you know, we have a sensible gut combined with deeper research and valuation, and that's it. You know, some other things to call out just as a personal community. You know, I posted a couple things on my interview from Nikola just because a lot of people have asked for shorter form content. You know, it's kind of hard to sit through an hour and a half interview with Jeff Whitcomb, who's a trucking expert. And for those of you who are like, you know, sitting on a bunch of Nikola gains and wondering if you should take your profits and go, or if you should stay in, it's probably helpful for you to watch that hour and a half. But if you're not that person and you're just kind of playing around, then that's what I post, you know, shorter form content. Again, we don't need to talk about Nikola. We've talked about Nikola ad nauseum. You know, I posted about SHLL. You know, what was that? June 24th at $16 a share. It is now, I believe it's very high now. Let's see. It's doubled. It's $32 a share. And I will be the first one to tell you that it doesn't necessarily make sense. It seems like a lot of the Nikola hype investors love this story. And yeah, and so it seems like some of that money sloshed into the Tortoise Acquisition Corp, which is SHLL, which is acquiring Hyliion. But if you guys are interested in either one of the space, please go watch that interview with Jeff. Very, very, very good. I believe compressed natural gas is probably a much shorter putt than hydrogen. Yeah, and no credit like in terms of like, oh, can I predict a double? Like, no one can. And if they think they can, then they're just lying to you. And eventually, right, then you take the full statistics of posting about stocks, and then you actually do like an analysis on them of like, I'm not pretending that I predicted a double, which it's just people ask about these like very hypey stocks, and I tell my opinion on them, and I said I liked it. Like, I liked it much better than Nikola, and it seems like it did well. FMCI, on the other hand, hasn't materially changed. I think I posted about it around $17 a share, and $17 a share. Market's probably flat to down since then. I really like it long term. So when I think about things, I think about a 10-year view, right? It's, if I'm going to buy this thing, I want to find the next Tesla. I want to find the next Amazon. I want to find the next Google, the next Facebook, the next Apple, you know, on these 10-year period periods. Someone asking about why is Peloton down? I would say that's probably because this dynamic of work from home or live at home plays, or perceived at home plays, go down when return to work plays go up, and vice versa. And that's kind of like where the market, this is why we have so much volatility in the market. It's because no one knows, the disparity of outcomes is so wide now. That's why you see big fluctuations up and down. It's because what is the market? It's a cash flow discounting tool. And when you're discounting, infinite years into the future, discounted back, and a pandemic is going on, like those cash flows can look very, very different over the next 10 years. And so what the market is trying to figure out is, are we going back to work and going back to play? Are we all going to go out into Disneyland soon and fly around like we used to? Or are we going to stay at home, and is this a new paradigm? Are we all going to stay at home? When I like things like that company, I do deeper research. I look at cash flows in the future regardless of COVID. My base case on any model right now is that a vaccine gets made and COVID, and we go back to work or we go back to how we were living our lives within 6 months after that. Now, that's a conservative view on stay-at-home stocks, and that's an aggressive view on return-to-work stocks. So if I'm taking that view on American or on an airline or a theme park, that's a slightly aggressive view, right? It's like assuming that we get back to theme parks like really, really quickly. So, I mean, just like I always layer in conservatism. So if I like a stock or I like a company, I don't even think about stocks, right? It's like I like the equity of a company. I'm thinking about, I like that company through COVID. And I layer in a bunch of conservative estimates. And if it still looks relatively cheap or fairly priced after I layer in conservatism, then like more likely than not, I'm layering in conservatism so that reality is better and I'm pleasantly surprised. So the stock's just going to do better than my model, right? So I like to, again, it's that whole Warren Buffett. You don't have to swing, like we're in a no strikes called game here of baseball. And you just wait pitch after pitch after pitch. And like you just don't get the FOMO, right? The price doesn't justify the company justifies the price over the long term. And this pitch might look weird coming out of the pitcher, but it might be a perfect pitch, and you're like, oh, that could have been a home run if I swung at it. But look, if you go through life, just in general, right, dwelling on the past, dwelling on things that you could have done in the past that would have worked out slightly perceived better for you, like I don't believe that's a good way to go through life. You're just going to go through life depressed and backwards looking, right? What can you control in your life and what can you control in your portfolio is today and tomorrow and the next day. It's not what did you miss, right? So even if you do feel bad, guys, I don't feel bad about missing Nikola, right? I try not to buy any of these things too, because it's just like I'm trying to be this like independent, rational analyst for all of you. And so, yeah, when I opine about them, like, and people say, like I see people in comments I guess attacking each other saying you're just salty that you missed it. First of all, like just don't be salty, right? There's always another day. Tomorrow's always another day for your portfolio, for your life. And there's always a chance to make money tomorrow, right? There will be another SHLL. There will be another Nikola if you're a hype investor. But I don't really care about that. For me, there will be another Amazon. There will be another Apple. There will be another Google. There will be another Tesla. And at a certain point, there will be a Berkshire Hathaway darling of value investing. Cool. Yeah, and Andrew Lim is saying for every Nikola you catch, there's 10 that goes to the dumps. Yeah, so these things are, I would say, even a worse form of venture capital. And like selective data picking can make things look way more attractive than they actually are. When you take things in a holistic sense, then, whatever. Anyway, welcome back. June 29th, Monday. Update up 1.5% in the markets today. If you want to join our two $20 raffles today, please go to my YouTube channel, concurrent live stream. There is a Rafflecopter link, and you click it, and you just put in your little Venmo, PayPal, or Cash App name, and I pick the winner through Rafflecopter.